IVM.
Hi everybody, just wanted to ask everyone for a quick favor. We're running a brand survey right now and would really appreciate it if you could let us know what you think about the advertising on IVM. Go to ivmpodcast.com/survey and do let us know. As part of this, we'll be selecting 10 random participants and sending them some IVM swag, so do fill out those surveys.
Welcome to All Things Policy, a daily podcast supported by Pragati, a flagship media initiative of the Takshashila Institution. We are a bunch of policy nerds based in Bengaluru, and we like to bring fresh perspectives to Indian affairs and an Indian perspective to global affairs. So grab a cup of coffee, sit back, and join us for today's chat.
Hi, welcome to this week's episode. I'm Sridhar Krishna, and I'll be talking to my colleague, Aarushi Kataria, at the Takshashila Institution. We will be talking about a topic that's very close to my heart. There's one about creating a large number of jobs in India and about how skills play an important role in making this possible. I'm working on a project, have come up with ideas on creating 20 million jobs every year in India. If you see our demographic details, you will understand that, about 18 million people turn 18 every year. And we also have a large number of people who are in agriculture and earning very low wages. So they need to come out of agriculture because I don't think our agriculture can support the number of people that are engaged in it today. So we need more than 20 million new jobs to be created in India every year. And at the best case scenario, it's about 4 million jobs are being created. And there are more pessimistic views which indicate that we generate less than 1 million jobs every year. And this data I'm talking about is pre-pandemic, right? Post-pandemic, things have become far worse. The issue has become even more critical. So there's a huge jobs crisis in it. That's on one side. On the other side, we've got a shortage of skills because the way technology has changed, the skills that people had in the past are inadequate to help them get jobs today and in the future. According to ILO, there's going to be a shortage of 29 million jobs. There's going to be a shortage of 29 million skills by 2030. A huge skills deficit in our country. These numbers all look astronomical, may not always add up. So I know that there is some doubt in the data itself, but let's understand that this crisis is absolutely real and needs to be addressed. So on one side, you've got a large number of people who need jobs. On the other side, there are a large number of jobs which are going unfilled because people don't have the skills. So what do you think, Aarushi, as a young person? Do you think that something like this can be solved in our lifetime?
I think one thing we've always been told is that when one goes to college, you learn the skills that make you a lot more employable. So we're always taught that some form of education, some form of formal education, especially if it's vocational, tends to make you or give you the skills that make you more employable in the job market. So I feel if we were to look at a sense of a model that would equip people with the skills that are now required in the job market, which as we see today could be coding, data analytics, understanding data, being able to interpret data. If people could be taught those skills, then I feel we could sort of bridge the gap that exists between the jobs that are there and the skills that people need to get them. But the question then becomes that doing these courses, doing these trainings requires a very large amount of capital from the person who wants to get trained. So I think we need to think of a model that probably does away with this hurdle and where capital and time and the opportunity cost of getting this training is not something that a person is considering while making the choice to upskill or not.
Yeah, I think there isn't a shortcut to solving certain problems, right? You're absolutely right when you say that, technology has changed. There are new types of skills that are required. And these skills, if people could invest the time and energy to go out and learn them, they could remain relevant. I studied finance when I was young when I went to B school and I learned finance. Before that, I was at BITS Pilani. Then I went on to run industrial rubber products, went on to a revenue cycle management company. I built some software for structured finance. And then I went on to doing work in clinical data management. Then after clinical data management, I moved on to doing work in data and analytics. Because while I was doing clinical data management, I got interested in data and analytics. But I think, and then I built a career for over a decade in data and analytics and all things digital. I managed to remain relevant over 30, 35 years. And that I managed to do because I had the resources and the support to be able to acquire new skills constantly. I happened to find myself in organizations which were enlightened enough to help train their people and help build their skills. Not everybody is going to be that lucky, right? So we need to have a system that is sustainable for a large number of people. And this is critical for us to be able to solve this problem for millions of Indians, not just for 1 or 2 or 10 or 100, but we need a system which can solve this problem for millions of Indians. Now, think of somebody who's earning 10,000 rupees a month. That person is unlikely to have much savings, is unlikely to be able to take 3 months off to go out and learn new skills. Let's say a lathe operator wants to become a CNC machine operator. She may not have the time or the money, resources to spend 3 months acquiring a new skill. But if she were to do that and spend another 50,000 rupees on paying for the training, if she were to spend this 80,000 rupees, she could be earning 25,000 rupees a month. Now, but why doesn't she do it? I mean, even assuming, let's say they take a high interest loan, even then she would be in a position to repay that loan because the income differential between 10,000 and 25,000 is quite significant. But she doesn't do it because she does not know what skills to acquire, number one. Secondly, she does not know where to acquire these skills from. And she doesn't know that if she goes and acquires these skills from with this training institute, whether she will actually get a job that will help her repay this loan. You look at America today, right? The US has $1.5 trillion in student debt, with the debt constantly increasing, right? The balance is just going up and up, which means the students are finding it difficult to repay those loans. And why are they finding it difficult to repay those loans? Because the cost of training has gone up and the income that you can generate from acquiring those degrees in colleges is going down. So there is a situation where the institute is left scot-free. So if you're a college which is imparting training to people or teaching, giving somebody a certificate course or running a program, you're getting paid while the student takes a loan and struggles to repay. So there are other alternatives that people are talking about today, right? They're talking about things like what we call career impact bond. There is this company called Social Finance, which has set up some career impact bonds. These career impact bonds talk about the person who's providing the training, provides an at-risk loan to the person who wants to take the training. So in this case, if Gurmeet wanted 80,000 rupees in order to be trained to become a CNC operator, the training institute would give Gurmeet the equivalent of a loan towards getting this training. That means Gurmeet doesn't have to pay any money upfront. So that's the first barrier crossed. The second barrier is whether Gurmeet will actually get a better paying job after the training. So now the guarantee that this training institute provides is to say that Gurmeet, you repay the loan only if you earn more than what you're earning today. And you pay a percentage of the difference. So if you're earning 10,000 rupees today and you earn 15,000 rupees after the training, then you pay back a certain percentage of it. Maybe you pay back 2,500 rupees. But if you earn 20,000 rupees, maybe you pay back 5,000 rupees every month. And you pay it for a certain period of time with a cap on how much you have to repay, right? So if you look at this scenario, now why will Gurmeet have a problem acquiring the skills? Gurmeet will happily go and get herself trained. Now the training institute assumes this risk, but the training institute does not have unlimited amounts of money. they need to get this thing refinanced. So that is where securitization comes in, and the creation of bonds, etc., happens and goes on. So you know what bonds are, right? Aarushi, I mean, what are your views on this, on securitizing this, and do you think such things can help solve the problem?
I do think it could help solve a problem because the career impact bonds are essentially removing the biggest hurdle that exists for a person to upskill. They're taking away that upfront payment, they're ensuring a steady flow of income for the person who's getting the training, especially if they're out of a job, if they had to take this training. And at the same time, it's changed the incentives. Now, the training institute doesn't necessarily need to rely on 10 students. It needs to work on the fact that these 10 students need to earn more money, which has changed incentives, and it also ensures that they provide quality training to the students, which ensures quality results. And I also feel the securitization that you talk about, the creation of the bonds itself, would play a very crucial role. We can look at investors of two kinds. We have the traditional investors who could be financial investors, while you have others who are philanthropists in the government. Now, the government is more likely, or the philanthropists are more likely to probably write off something, invest in something that's a little more risky. And I think they'll play a very crucial role in probably helping these career impact bonds and training institutes get off the ground until, the traditional investors have enough information to make a calculated decision on whether this bond is worth it or not. So the governments would probably be your first investors. You would have philanthropists who could do this as a part of their CSR initiatives and be able to write off these loans if they don't end up, getting the kind of returns that they want, at least in the starting, because the starting is going to be trial and error till, these institutes figure out what works, what doesn't, what sort of skills are employers looking for. And over the years or over the months, depending on how quickly these courses go, I feel the kind of data that traditional investors would need for the returns, for the kind of average growth in income, for how long are these skills valid, then they would start investing. And this turns into a virtuous cycle then, with this kind of investment constantly happening into the career impact bonds, people repaying these loans as and when they are done with their training and earning, and this then going and benefiting more people, which is also why I think career impact bonds would work really, really well in a place where the sense of community is really strong, because then people have an incentive that today I was able to do this and I want to ensure that someone after me is able to do this. But I still feel that the repayment could be an issue that will continuously crop up irrespective of how optimistic we are. What do you think?
Yeah, I think so. I think the repayment of these loans provides slightly different challenges. I mean, it's not, uh, let's take the case of this $1.5 trillion in student debt in the US. Those loans do get repaid. There is an existing structure for receiving those payments. But the difference there is that somebody has to come in to pay. There's also very often someone who acts as a guarantor for these loans. And you have a situation where there are, there sometimes there is even some kind of security offered by the person who is taking the loan. Those repayment rates, even with all the security, etc., they still have some defaults, right? They have defaults which are sort of higher than what people would have liked. But the difference here is that number one, you're telling people that they need to repay the loan only if they actually see an increase in their income, which means not only do you have to like keep track of how much they're actually earning today, then you need to see how much they are earning after the training. And then you need to make sure that you have some method of collecting the money from them. So yeah, there are these challenges which do exist, but I don't think these are impossible to solve. And but it's something that cannot be treated very lightly. I think it's an important issue to deal with and to try finding something. And I liked your point. I think there are a few things. I mean, we can think of some ideas. Number one, we have now created all this Aadhaar numbers for everybody in our country. That helps create a certain unique identity for somebody, and you can keep track of their incomes because every bank account that they possess will require this. There is another challenge in our country that a large number of people work in the unorganized sector. But as things change and more people get into organized sector, that might change. there was a large number of people in our country who were unbanked. Today, we do have more people who have at least a Jandan account. So I think there is a method by which all this can be done. In the past, it was very difficult to collect all this data, put it all together, keep track of it, store this information. But today, with data being more easy to acquire, more easily accessible, and even cheaper to store and use, and analytics being more powerful, I think we should be able to find a way.
Yeah.
That's my view. Yep.
No, I do agree with you. I feel like over the last few years with the digitization wave that's been there in India, be it, how our entire vaccine platform was completely digital this time, or the fact that now, getting your Aadhaar updated is not a pain. You can simply do it online. You don't have to go to the bank and visit, a bank branch that has an Aadhaar person. I do feel like the online way is a good way to go about it. I think the bigger challenge that we might face is the lack of financial literacy that exists in India. According to some estimates, about 40% of people don't have access or don't know how to effectively use banking facilities as basic as opening an account or depositing money in it. And while I do believe that upskilling people is a very necessary task that we need to undertake to ensure that there is employment, we also need to ensure that the money that they get out of this employment is not gone. It's not gone in the wind. And I think a way to do that would be to couple upskilling programs with financial literacy programs to ensure that people make informed decisions.
Yeah, I think so. I think that's an absolutely brilliant idea, Aarushi. It's important that people have financial literacy, and some of us benefit from being born in the homes that we've been born. We have people to learn from. We have people who are competent to give us good advice about how money should be managed. And I think, like many of these people whom we are trying to, the millions of people whom we are trying to support through this program, may not have the same privilege, that may not come from the same privilege that we come from. And therefore, providing financial literacy training as part of any of the trainings that are supported by these career impact boards, I think will go a long way. The other idea that you talked about was also very important. I thought about microfinance. The way microfinance is being done, and small loans being given to a bunch of people, seemingly very barely educated, etc., rural. This is even before banks and access to banking for everybody and all that. Small amounts of money given, and they still had a sense of duty and to come back and repay those loans. The the default rates in these microfinance loans are much lower than what you and I would think they would be. Because I think people see it as the microfinance companies, the interest rates that they charge are way lower than what a village money lender would charge. And people want to have this, they don't want to kill the goose that lays the golden eggs. They want to make sure that as a community, they continue to benefit from these microfinance loans. Therefore, they do, as a community, try to repay. I think we need to create that kind of thing, right? So it has to be one through technology, digital, data, analytics, etc., trying to ensure that people repay. And on the other side, we should also involve the community, the sense of purpose, making sure that people understand that if they repay that 50,000 rupees that is due from them, then that 50,000 will now be available to another person to also go out and acquire new skills. And this money will sort of keep being available. And therefore, it's important. It's morally important for them to try and repay it. I think if you have those two things going hand in hand, both technology and a sense of duty, I think something good can come out of this.
I agree with you. And sort of going back in my question about, what should we include while we do these upskilling programs and what we shouldn't. I think the biggest question that comes to mind, being a product of the Indian education system myself, has been that a lot of the focus has always been on rote learning. The fact that, you aren't tested on your skills, but rather on your ability to be able to memorize a book. Um, how would we change the pedagogy itself for these upskilling programs to ensure that they're skill oriented rather than ensuring that a person has memorized, a book or manual for a machine?
I'll tell you what, we will discuss this further after a short break.
Hey, it's been another great week on the IVM Podcast Network. On The Longest Constitution with Priya, get a closer look at laws that protect our children from sexual abuse. Ashton Doctor joins Sadaf and Harchit on Nankari to talk about the mental and physical benefits of intermittent fasting. On Misconduct, Raghavi and Nisha tell us how Seema Parihar went from being a bandit to a Big Boss contestant. On The Fighting Goat, Arjun and Somesh talk to Ranjit Ravindran about how mixed martial arts as a sport got so popular in India. And on This Round Is On Me with Gauri, Chef Aarti Sampath shares her experience of cooking for Prime Minister Modi when he was in the US. Do follow us on social media. We are IVM Podcast on Twitter, Facebook, Instagram, and LinkedIn. And remember, if you enjoyed this show or any of our shows for that matter, please do tell a friend. Word of mouth is the best way to spread the word about a podcast. And finally, we'd like to thank our sponsors on the network this week: Ciet Cred, Bank of Baroda, Quarter, CoinSwitch, Kuber, and Intuit India. We really do appreciate the support. You are what makes this possible.
Welcome back. We were talking about skills and how things would come back. You want to sort of repeat that question?
Yeah, so I think my question could be summarized as India has a history of having an education system that prioritizes rote learning. So how would we, with these career impact bonds and the career institutes themselves, sort of come up with pedagogy and curriculum that is not based on, rote learning a manual, but rather actually knowing how to operate the machine? Since it would be a pretty big shift, and we've sort of seen this with the new education policy trying to introduce coding in schools at earlier classes, yet it's been met with a lot of resistance. So how do we expect this to sort of play out with these career institutes, which don't have the kind of capital that a lot of these established schools already do? How do you see that happening?
Sure. I think, and see, let's understand this. When you look at career impact bonds, let's understand that the financial markets are going to be very closely involved, right? Which means that whatever training that's provided by this institute, the money that's owed to the training institute will be now refinanced by issuing bonds. Now, the financial market will keep track of how these bonds are performing, whether the people who took this training are actually repaying the loans or not. If they are repaying the loans and they're repaying it well because they're earning good money, people know that this training was good and useful. If you find that they're not repaying the money and there are large amounts of defaults and delinquencies, then you know that the training has not been very useful and effective, right? So there is a very quick feedback which is available to the training institute in a way that it hurts them, because the training institute is not going to get all the money that is owed to. It will get some of the money and it will need to keep some skin in the game, right? So therefore, it may not get much of its profits if it finds that the training that it's provided has not got people jobs and not been able to get them the skills that are needed to get them those jobs. So therefore, now we have made sure that the incentives are aligned. And once the incentives are aligned, the training institute will ensure that they are trained in a way that will help. They may do that in multiple ways. One, they may invest in those machines. Another way is they may just go and set these training institutes just outside the factories which are going to hire these people. For instance, some time back, I was in a consulting project. I used to do some work for a large garment manufacturer. This garment manufacturer had training institute just outside the campus. They trained large number of people there and used their own facilities and then as a place to help train these people in those sewing machines, etc. Right? So I think those kind of things may happen where large employers themselves decide to train people and then hire the people who actually do well. And at the same time, they're not investing incredible amounts of money of their own. They're making sure that the person who's getting trained does it. Or they may have an intermediary who connects with them who's able to do that. There are multiple ways in which this can happen. Or the training institute might just decide that there is enough market for this kind of work. So therefore, let me just buy one CNC machine or some such machine, etc., and help train them. Or there could be simulators that they use, which help you to learn without having those physical machines themselves, right? So not, if you look at how pilots learn how to fly, not everybody just gets into a jumbo jet and gets certified on it, right? They work on simulators quite a bit before they can actually get onto the number of hours that they actually spend on a large jet, etc., may be much more limited. So I think that's one way by which this kind of training will happen. But I'm more hopeful of this fixing that problem than the earlier method of the institute going scot-free and not being part of the whole payment system. Earlier in the earlier dispense, I mean, the way it happens today, like you take a loan, go study at IIM or IIT or whatever, those institutes get paid and then you earn an income and you repay. But if you go study at an IIT or IIM, all of us know that the fees are very small compared to the kind of income that you can earn thereafter. Therefore, it's a fairly low risk loan to take, and it's a low risk loan for the bank to give. But if you go to a second rate, third rate, fourth rate engineering college or a B school, the situation may not be the same. You may not graduate from those schools and colleges to come out and get the jobs that you are hoping for to repay the loans that you may need to. So the financial market, in my opinion, of which I'm a great believer, will ensure that there is quick feedback to people in the system about the effectiveness of a particular training institute, a training program within that institute, and the effectiveness of training a certain kind of student. Now, let's not forget, I mean, the student also plays a great role in deciding whether a job can be, I mean, he or she is employable. So if I go and pay 50,000 rupees to try and become a professional tennis player, that's not going to be money well spent, to put it simply, right? I just do not have the talent necessary to become a professional tennis player. Similarly, somebody may not have the talent that's necessary to become a data scientist. Maybe they should start. Maybe they should do something else. Maybe they should do visual design, right? If visual design is their skill, and if a data and someone who's capable of becoming a data scientist may not be capable of becoming a visual designer. So I think the point is about, as the incentives get aligned, the institute will ensure that people with the right aptitude get onto their programs, number one. People who can graduate from their institute and go out to get good jobs. I think they will train those people who are trainable, number one. Number two, they will ensure that the skills that they impart and the way they impart them are such that people can get employed. So therefore, I'm quite confident that that will happen. The market will ensure that this happens. Yeah.
I do agree with you. And I believe that, incentives are how human beings tend to take their actions. They consider what is the incentive of doing a particular action. And the greater the incentive, the more likely they are to undertake an action really well. I think to just go back on something that you said about, factories probably training people around the factory itself. Don't you see it as a possibility that the number of students or people getting trained in a classroom is much larger than what the factory can realistically absorb as a part of its workforce, which could maybe end up creating a sort of glut in the market itself with, say, the number of people who now know how to run a CNC machine, but there just aren't as many CNC machines in the market?
Yeah. I think that's an interesting point. But let's understand again, I mean, if you just look at the markets, if you believe in the market, then the market will ensure that there isn't a glut. The gluts might exist for a short period, right? So there might be like a glut where like a couple of batches have people who are not getting employed. But if every batch comes out and only 5% of the people in the batch get employed, then clearly that's something that you're doing wrong. You're either not teaching this skill well or you're teaching the wrong skill, right? It's not just about teaching the skill well. It's also about what are the right skills. And that will keep changing, right? I think the reason for this whole need to reskill ourselves is because technology is changing rapidly and continuous. And as they change, you do need new skills. And like I mentioned before, I needed new skills to remain relevant and stay employed. And people who manage to do that stay employed, and those who don't will not, right? So therefore, the market will ensure that we don't end up training way more people than the market can employ. The training institute will keep track of that. The number of people who are out, the number of people who will be trained, number of people so why would they spend 3 months training a whole batch when they know that only 5% of these people will get employed? In the earlier situation, they may not have cared, but today they do care, right? Because then their institute will get a bad rep, and then in the future, their trainings won't get financed, and therefore they will have to shut shop. So there won't be a glut created as an account as a result of that. The way the training may happen may have to be different, and you have to get creative about it. It maybe the batches will have to be smaller, or maybe the training will be done based on uh, real demand that has been indicated, or for certain types of very specialized skills. For generic skills, you could train people and put them out. For very special skills, you may need to first have an organization that says, I want to hire 20 people. Can you get me about a set of 20 people? And then this guy goes out and finds somebody, gets them trained, maybe trains a group of 25 or 30 people so that that company can hire 20 of their best. So I think that's how it works.
Right. I think this conversation has made me realize that the career impact bonds does sound like a very sustainable model to upskill people, to ensure that the jobs that are there and are vacant right now get taken up by people who have the skills, and also ensure that later on, when those 20 million jobs that we speak of creating are created, they don't go vacant as well, which would further exacerbate our problem. But I think the last question that I would have is, career impact bonds, or the idea of social impact bonds in general, has been around for a pretty long time. Yet the pioneers themselves, which is social finance, they themselves don't do this at a very large scale. What do you think is a hindrance to doing these projects at a large scale? Because we are talking about doing this for million or millions of people, and yet the numbers that social finance is talking of right now are in the thousands and hundreds.
Correct. So, in fact, I mean, it's funny that you mention it. I mean, it's not just social finance. Social finance did come up and, give a name to these bonds and call them career impact bonds, etc. But an idea of something like this, where people get at-risk bonds and then, at-risk loans, and then they go on to repay them in order to, when they get better jobs, has been around for a while. In fact, I used to work for a company years ago where the CEO had this idea. So he talked about it to me years ago, and we actually set up a website called K-Capital, etc. And we tried to drum up some interest and support for something like this way back. But I think that was way ahead of its time, because I think the real challenge of something like this is about access to data. You need to have access to the kind of programs that will do well. You need to have a method of evaluating institutes which the financial markets are willing to go out and finance and support. Philanthropists today are much more demanding of impact. They want to know if they are spending $1 million in reskilling a group of people, they want to know that this million has been well spent, and that the people who got trained are earning maybe $10 million out of this training. That you've actually taught a bunch of people how to fish, and not just used it to buy $1 million worth of fish to people and distribute it, right? You want to make sure of that. So there is a much more demand for impact. It has never been easier to collect data. There has never been more data available on this planet than there is available today. So at the risk of repetition, I'm saying that, there is data today which makes these things easier to do than they were 15 years ago or even 5 years ago. So that is one side of it. The other aspect of it is the need to, some of these things take time. So, for instance, everybody knows that, a Harvard education or an education at IIT or an education from IIMs, or even some of the second level institutes, etc., it's good. And you know that the money spent on these courses will generate the kind of returns that you're hoping for. But it takes time to build such a reputation. And I think if we have a bunch of initially, I think we talked about how will these career impact bonds work. And I think the answer is probably in the details, right? Because if you look at these bonds, you train, let's say, 1,000 people. You've given them like 50,000 rupees each as a loan in order to do this training. You need 5 crores to be refinanced. In order to do this 5 crores worth of refinancing, there could be somebody who comes up and sets up a bond. A philanthropist may give 1 crore of rupees. The training institute might keep 1 crore of rupees as its risk capital in this whole thing. 3 crores they may get from the financial markets. If 60% of the people repay their loans in full, then those at least the financial investors will get their money back. The philanthropists, the governments, the training institute who take on the more riskier part of the tranche, they will sort of lose some of their capital, or in some cases, they might get their capital but lose some of their interest. This is how it might start off initially. Over time, you will get information about how these different training programs are doing. There will be a method by which you can collect that information quickly and be able to course correct. Therefore, then these investments will become less risky, and a larger percentage of the loans will get repaid and satisfy financial investors. I think eventually when it comes to a point where financial investors get satisfied by this impact is when this will really take off. But I think it's a great start to make, even if you're training 1,000 people or 500 people and trying to do this, because even if you have 100 crores to spend on training and you get 80 crores back or 70 crores back, that means you could train another bunch of people with that 70 crores. And then you punch another bunch. And this keep going on till you get to a point where there is a very large number of people who be trained. You have enough data. And therefore, then you can figure out what training will work and what will not. And then the funding will go towards training that actually is useful.
Yeah, I think we're sort of getting there with Joe Biden's announcement that he's investing about $2 trillion USD into infrastructure and the job market, with billions of it going to training programs that are evidence-based, that don't require people to pay upfront. So I think we're not too far from seeing career impact bonds or something similar to them become a big deal in the near future. But it was great talking to you today. Thank you so much for coming. And we'll add a few links about career impact bonds in the description below.
Thank you very much, Aarushi. It was a pleasure talking to you and getting a young person's perspective on something that I've been interested in for many, many years. And I'm quite excited to see that people like Joe Biden are supporting an initiative like providing at-risk training and making people repay loans only when they actually get better pay. Thank you very much. It was a pleasure.
If you liked our show, don't forget to check out other interesting podcasts on the IVM network. You can tune into them on the IVM Podcast app, ivmpodcast.com, or wherever you listen to your podcasts. You can also follow IVM on social media. The handle is @IVM Podcasts on Twitter, Facebook, and Instagram. And hey, if you'd like to dive into Takshashila's research on technology, strategy, and economic affairs, check us out at our Twitter handle @TakshashilaINST or our website takshashila.org.in.
Namaste, this is Cyrus Brocha. I am part of the government cancel culture program to remove rubbish off all the different streams available. So what we have is all the collected rubbish we put together on our show. It's called Cyrus Says. It's on IVM Podcast. You have to watch it and listen to it. It's on our app. It's on our website. It's on the YouTube channel. It's on Facebook. There are many different ways. Don't bother me and ask me how. You have to find out. We talk to different personalities. Many of them are known. Some are just people we meet downstairs and invite them up for chai. But the point is, it's fun and it's very therapeutic. So please join in and listen to Cyrus Says.
Given the unprecedented times our nation is going through, where positive is now a dreaded word, Smile India gets you delightful news from across the country about people and places that continue to spread the much-needed hope and positive vibes. I'm Shifa Maitra, and you can hear Smile India with me every Thursday on the IVM app, website, or wherever you get your podcasts from. Oh, and did I tell you Smile India is available in both English and Hindi?